Do you think you frighten them with your offering?
If you come up with something that you can say, okay, that might have a high probability that you might outperform, people are skeptical.
This is AssetRush The Talk. It's about aspiration of assets and people in the financial sector. Hello everybody, we're here for AssetRush the talk that we have with people from the financial industries, with the innovators in our sector, about their aspiration and their passion for the business and of course their endeavors. Today I'm here with John Manieri from Arvea Investments, a new fintech company that revolutionized the investment process for asset managers. I'm really glad to have you here today.
Thank you for having me.
So please tell us a little bit about yourself.
I'm John Manieri. I'm the founder of Arvea Investments in Zurich. It's an advisory investment company that uses fintech to optimize the investment process.
This is fantastic, John, and thank you for being here. So just in a nutshell, why did you join and why did you form Arvea Investments, and maybe also where do you see your difference that you can make in this market?
Yeah, so I'm coming from the fund management business. I was investment manager for 28 years in my life. I had an opportunity to grow and to see how investment products are being built and managed. And over time I saw that the human bias is giving, on one hand, a lot of opportunity on the private equity side, also on the listed side. But if you want to build a investment management company or investment management process that you can automate with those data or with this lot of data that we have here now in the financial community or in the financial information flows, I thought it would be interesting to see how you can integrate machine learning and artificial intelligence into the investment process, to quantify it, but also to reduce the bias of a fund manager, me included.
Absolutely, thank you. Now, that sounds really interesting, and you certainly have a lot of innovation there. So you talked about, or you just said, machine learning. So how is that involved in the process?
So basically, if a client comes, depends if you want to do an active managed certificate or you want to have a fund, he gives us most of the time a benchmark or universe to invest in. And I was always talking about the equity side of the asset allocation. So we run the pattern recognition and we filtering out those companies who had, on a probability scale, the high potential of growing, but profitable, in a profitable way.
How does that difference reflect in the endeavors you do in the products you create?
Well, on one hand, you can scale the entire investable equity part. You can run things in China, you can run in Asia, you can run in Europe, you can run in the US. As long as you have a benchmark and as long as you have liquid names, because if you're on the small illiquid side, it might be a little bit tricky.
Where do you think that the human interaction is needed, and where do you think it's not?
Well, the human interaction is still very important, especially the specialists in the corresponding field, like in healthcare or biotech or in digital or in artificial intelligence. Or if you analyze those cloud companies or the cybersecurity companies, someone who has to validate the business model itself. Because on one hand, you have the estimates of the analysts, but on the other hand, if the company is being pulled out or shown to be part of the portfolio, you have to make sure that the business case is also valid going forward, not just the number itself.
Does that usually show in a short term or in a long term way, or how would you quantify that?
So, based on our experiences and real life track records, we saw that if you have a time frame between 3 to 5 years, you will capture this overperformance against a given benchmark.
The best, yeah, in the best way.
Yeah.
Okay, super. Now, how does that feel for somebody to implement your services?
Well, it's easy actually. If you have an idea, if you have an universe, or you have a benchmark that you want to have a product on, we can implement that in a fast way through active managed certificates. Or you can basically launch a fund, or you can invest in the corresponding companies or funds that we already have.
How's the reaction in the market when you approach asset managers with that service?
Well, it's an interesting way about the reactions. On one hand, they are amazed But on the other hand, they said, okay, is it really true? Is that possible? Because based on the statistics, me included, as a fund manager, you, after 3 years or 5 years, you're not beating the benchmark on a regular base.
Yeah.
So if you come up with something that you can say, okay, that might have a high probability that you might outperform, people are skeptical.
Do you think you frighten them with your offering?
Well, the big uniqueness, or let's say the differentiation, the competitive advantage that we have is we run the entire way on a very low cost base. So we are only paid if we outperform a relative index.
Mm-hmm.
And that might scare some competitors.
Yeah.
But on the other hand, if you can have a honest and performance-oriented remuneration, I think it's a fair way to go.
It sounds really fair to me, to be honest, that you only getting paid on extra performance, so to say, on our performance. So how does that feel? How's the reaction from market participants to that?
Well, this is an interesting question because on one hand, they don't want to pay.
Yeah.
And they want to or they want to have the fund manager accountable of their performance.
Yes.
And that's exactly the way to do it. Also, the way, exactly, that's not true, but that's the way we've done it.
Yes.
I don't mean that it's right, but it works. It works in a way that you need, for that, as an investment advisor, you need different strategies that are at the same time in the market, like an S&P 500, a healthcare, a digital, or a biotech, or a US equity, or a ex-US equity fund. Why? Because sometimes you have those business cycles and you have those shifts between subsectors. One of those strategies most of the time works. Mm-hmm. Not all of them at the same time, besides if the Fed is helping. Mm-hmm. But normally you have 1 or 3 strategies that works during a phase and the other ones are not, and then it changes then over time.
So who's your ideal client?
Oh, that's an interesting question. The ideal client is someone who looks into the future and says, I would like to be participant or help young investment manager, in a sense of investment advisor companies, to create a optimized investment process. Because you can do 2 things with that. On one hand, you can try with the probability of creating an overperformance, but on the other hand, you can reduce the cost within an investment management company. Mm-hmm. And that sometimes is something that you want, but sometimes you don't want to do that because it has other repercussions of making that decision.
Apart from that, what are the benefits for your clients? What are the benefits in terms of margin? What are the benefits in terms of efficiency? You spoke a little bit about that, but tell us more about that.
So the client has a product that he only is paying when we outperform.
Yes.
Most of the time. And he has a product that is flexible, depending what he wants, and it's scalable. So you basically, once you have a strategy that, let's say you take an S&P 500 ETF, right? Why would you buy an S&P 500 active managed fund if it's a market neutral hedge fund or something like that? Well, if you outperform S&P 500, why do you need an ETF?
Clearly, completely understood. Now, how does an asset manager promote that to its client working with you, his investors?
Well, we are just advising the banks to do the investment part. You're not the investment manager. So the client can come and say, listen, you can shape your own strategy as long as we have around 50 to 100 stocks at least. The better it is, the more assets or more equities you have in the portfolio to make the math. And then we can be flexible to create exactly for the client his strategy. And he's paying only the production cost, of course, of an AMC or of a fund, of course, or you're just paying when we outperform. So the flexibility, the margin, and an honest way to say, okay, if we do some good jobs, there's no problem to pay.
It sounds fair. It sounds also fun to work with you because it sounds like you're really innovative in that field. So how does that feel for you working with your clients? What were the feedbacks you got so far? Yeah, you maybe want to share a bit of light on that.
So the clients that we worked together, they were at the beginning amazed. And I said, okay, I give you a shot. I give you a chance. And that's all, it's all about that, especially now at the beginning. Because the traditional way to do investment is the one that we have. But it has to be someone, a client has to be open-minded to also not push, but to support a new way into the future, the digital future of investment.
What effect will it have on the future of finance? Or what's the ideal world that you see out of that solution? What is the result out of your solution, and to which ideal does it lead?
Well, it leads, if you look at it from a client perspective, it leads to a more flexible way to invest. It's cheaper on one hand, and you have less cost of production. That's basically, you automate is actually a high margin business. That can be great, but it can be also, on the other hand, challenging.
Do you also think that with the ease of your solution, that will also make margins for investment managers smaller or larger?
If you give us all strategies within an equity portfolio, you will reduce your costs as a client if you have clients that you buy products. And that can be a problem, challenging for, let's say, the analog world. But if everybody goes into a fintech solution, we might be a solution for that. Of course, track record of 3 years, you have to be around, you have to show that it works, and all those things. So basically what you need now is someone who has a vision of supporting first mover companies within the fintech world. And of course, we started with these software packages now that we developed the last 3 years. But of course, you can build it out. You can go into more details, and that's something that we're going to invest more money than going forward.
What would you wish to change for that happening on a large scale?
Well, if you have someone who helps you to build that and go after the, let's say, large markets, because this is scalable.
So you need trust, and you need good clients.
Yes.
That have a long-term plan with you.
Absolutely.
And that are certainly loyal and want to see long-term results out of your services.
Absolutely.
So what would you see from an investor's perspective, or what is the trigger maybe for an investor to appoint or to discuss your technology, your services with his money manager?
Well, let's compete. Let's try it out. I mean, if you can beat an ETF, not my friends that are in Zurich, it's more about the ETF. We opt for the challenge, and we will see after 3 years who is the better one.
Well, I can only congratulate you to that, and certainly like the effort and the sports. So, John, you have a broad history in finance. So tell us a little bit more about your experience and what led you up to this point today to actually bring that innovation to market now.
2 things. In my 20s, instead of going out, I was reading a lot of books about all these famous traders, prop traders, hedge fund managers, investment managers, and all the things. And I was intrigued about how they made money. Everybody has his own strategy. There's no one best one. It's just different. And everybody has the right way to do it, the way they do it, right? So I was trying to find my way because I was amazed about the, let's say, the honesty of this business. I know it sounds strange, but tell me which business or can you be in that you compete every second towards a market, towards someone else. I think investment management is one of the most fields that you can excel if you're good in every second. There's no discussion. You're good or you're not. And I like the competition, and I like the innovation. So what I've learned is financial data, or let's say the data that you have in financial markets, are immense. The data lake that you have, that you can build algorithms, models, valuations, it's amazing. What's intriguing me is always to find a way with open source, how do I get this information quantified in the data, in numbers, so that I can have an edge in investments. This is 28 years, always like this. Sounds crazy, it is, but I like to compete, and I like to do the innovative part, how to beat the market. If you're successful, you're successful. If you're not, well, something you do not right. And you'd have to be honest to yourself and say, okay, it doesn't work. And if it doesn't work, you have to sit down and say, okay, why isn't it? It's not working? And that discussion that we have internally is that this is my motivation to do it.
Okay, I understand that passion. I started as a market maker. I was very interested in actually being as close to the market and to the news and to the vibrant thing in this world, vibrant things in this world, as close as possible. And I also thought that the financial markets express that best and let me feel that pulse. Yeah, and I think we are both interested in that pulse. I think lots of people in our industry are interested in that pulse. So I understand the passion. So what led you to this point to actually innovate and thrive this new company, and what led you participate in that innovation?
I always thought I was 5 years too late in this market. The 80s, the 90s, right? I've missed the entire dot-com bubble completely. So when I saw that the digitalization came from Apple, from Facebook, different services, different field, has nothing to do with investment, of course. However, you saw that the people started to use those technology, social media analytics. Social media analytics comes down to profiling people, profiling markets. So now you have a lot of data available to capture those differences. And now we have the computer power to do it. And in our cases, we have the computer power that is not so expensive. 20 years ago, probably the big guys, the big investment houses or trading houses, were able to do it with a lot of IT. So now is actually the right time, because if you look at the structure of the market, you have a lot of experienced fund manager, experienced trader, experienced analysts. They are very, very valuable because they have an experience for the last 30 years, 40 years of how to grab information. Now grabbing this information can be put into digitalization for the investment decision process. And now is the right time, because a lot of people are still in the old world, and the transition from the old world investment into the future is happening now. So if you can capture that now and build up with your friends that has a track record on, let's say, on the experiences, and you digitalize that experience into the investment process, you can scale.
So in a nutshell, how would you describe the innovation that you provide today?
Cost efficiency by optimizing the investment process with the high probability of success.
So thank you very much, John, for being here and for that talk. I think we learned a lot. Now we see us again at AssetRush.
Yes.
You will be meeting a lot of good people there. Are you excited about it?
Oh, I'm very excited, and especially if I can talk about the strategies, I'm ready.
Okay, yeah, that's great to have you ready, and we see us on the 15th of September.
So much. Thank you.
Great.